There seems to be now some concerns about Russia more generally, but there is investors like you and many others who invest. So I want to get your view on the prospects right now that Russia is offering to global investors.
First of all, you have to recognize that Russia is large. So comparing to quite a few other markets, the potential for the investment and the size of the deal flow that can be generated there helps to develop a rather long-term both outlook and pipeline. The second one, if to look just at the pure technicals, currently the valuations are starting to look exceptionally attractive. And that goes around a whole number of sectors, and people who thought that maybe IT outsourcing or third-party software development was going to decrease as an industry, now with the correction of real wages, see that there is a potential for future and much further development of ventures in this field. What we also observe is that contrary to a few other situations in the past, the catch-up of real wages is not happening exactly as fast as everybody was afraid. So perhaps there will be some good news coming out of the devaluation, and if we look at the industries and sectors which are either very or highly labor intensive, there is a competitive advantage coming out of it. So we think that 2016, if everything goes without any significant surprises and developments, will bring three major trends. First of all, if the inflation is contained, and we will see that the government is able to resist the pressure to increase real wages, there should be a competitiveness coming back both in industrial production and service industries. Second, if we see the current level of valuation settling in, probably we're looking at an environment where good growing businesses could be valued at 5.5 to 6 EBITDA, which is a reasonably good point of entry, especially given that the consensus prognosis is with a GDP growth of at least 3.5%, whatever it is. The third one is that we probably see in the more what they call the emerged markets, and Europe being the best example, a situation of a low return environment settling for a long term. And we start to see the pressure coming up from the majors and especially the pension sector for higher returns on their portfolios. With a slowdown in China, you have $1 million question, where can you get that return? And some of the emerging markets in this geography, well, they're small. And even if they demonstrate a double-digit growth, for the overall scope of things, this will be a drop in an ocean.